do a little edit here. So I'm adding this at the beginning of the video because I wanted to stress at the end of the video, the second to last chapter on today's video, something really interesting is happening with foreign national money coming into the United States. I've never seen it at this high of a percentage. So please check out the whole video, watch till the very end, and let me know what you think about this foreign national money coming into the market at higher levels than I've ever seen before. Watch till the end. Thanks for being here. I really appreciate you guys. Hey everyone, I hope you have been so well. We've got some serious stuff to talk about today, okay? Things are getting interesting out there. But anyways, I hope you're doing well. I hope you're doing your thing. I hope you're crushing it out there. Today is Thursday, February 10th, 2022. Guess what? Reported inflation, 7.5% year over year. 7.5% is what they're reporting, a 40-year high. A 40-year high. I personally believe the real inflation numbers are much higher than that, but that's what they're reporting to keep us peasants, you know, nice and calm and relaxed, all right? So over the past year, inflation soared to its highest rate in 4 decades. It's hammered you, the American consumer. It's wiped out pay raises and reinforcing the Federal Reserve's decision to begin raising borrowing rates across the economy. The Labor Department said today that consumer prices jumped 7.5% last month compared with the year earlier. That's January year over year. That's the steepest year over year increase since February 1982. The acceleration of prices, guys, ranged across the entire economy from food to furniture to apartment rents, airline fares, electricity, you name it, everything has gone up. Okay, so when measured from December of 2021 to January of 2022, inflation was 0.6%, the same as the previous month and more than economists had expected. Prices rose 0.7% from October to November of last year and just under 1% at 0.9% from September to October of last year. There's a shortage of supplies and workers, heavy doses of federal aid, ultra-low interest rates, and robust consumer spending combined to send inflation leaping in the past year. And there are very few signs that it will slow significantly anytime soon. However, wages are rising at the fastest pace in the last 20 years, which can pressure companies to raise prices to cover higher labor costs. This is the best time to ask for a pay raise if you are in the labor market. The best time to ask your employer for a pay raise because this might be the best opportunity for you to look for another job because other jobs are paying more now. So if you don't get that raise that you want, go ask for it. What's the worst they're going to say? No? Great. Go look for something else. Get that deal, get that agreement, get that offer, and then go put in your 2 weeks notice. This might be the greatest time ever in history to look for something new. Anyway, ports and warehouses are overwhelmed with hundreds of workers at the ports of Los Angeles and Long Beach, which is the nation's busiest, out sick last month. Many products and parts remain in short supply as well. It took me a few weeks just to get a pool pump installed on my pool because they were sold out of the pump I wanted to get. Okay? Anyways, prices for a broad range of goods and services accelerated from December to January, and not just for items directly affected by the pandemic. Apartment rental costs rose 0.5% in January, the fastest pace in 20 years. Electricity prices surged 4.2% in January alone, which is the sharpest rise in 15 years, and are up 10.7% from a year earlier. Last month, household furniture and supplies rose 1.6%, the largest 1 month increase on records dating back to 1967. My personal opinion is I believe the Fed is going to raise rates 3 times in March, 3 times, or 2 times with a 0.5 point hike and a 1/4 point hike. Nonetheless, I predict 3/4 point rate hike total in the month of March. That's just not too far away, okay? Now, when that happens, when the rate hikes come into effect, money is going to be moving out of stocks and into safer investments such as bonds. This means people will start spending less and saving more. I think we are coming to an end of this massive boom cycle. All of the markers are there. When people move out of equities and stocks and into commodities, which will happen, that's what's going to happen. They buy the hard physical stuff. I got to ask you, who owns the majority of commodities in the world? You guessed it. That's right. China and Russia. China and Russia are two of the largest commodities suppliers in the entire world. And who is looking to team up against NATO at the moment? You got it. Russia and China. NATO wants the United States to do all the legwork and provide all the funding. And do you see how this is shaping up? Russia and Ukraine, China and Taiwan. The only thing saving face for the United States is that the dollar is the world reserve currency. And as long as these items are traded in dollars, the United States has leverage. But once other countries stop paying in dollars, which we've actually started to see start to happen, the United States gets upset, we put on sanctions, whatever, but we're starting to see this more and more. And as this becomes more of a reality, we could see some major, major issues on a global economic scale. Anyways, in Nevada, our lovely, lovely governor, Steve Sisolak, just lifted the mask mandates in Nevada, effective immediately. We've only had 2 years of programming the minds, and now you don't need to wear a mask. And our state has followed California in every move they have made during the entire pandemic. So whatever California does, Nevada does within 1 week. So if you guys have been watching my videos, you know I had predicted that 30-year fixed mortgage rates would be in the 4% sometime in Q4 this year. But guys, it happened much, much sooner. The 30-year fixed national rate mortgage is now sitting at 4.02% today, Thursday, February 10th. Still halfway through Q1 of 2022. What that means is the rate has moved 12 basis points in 1 day. And rates usually do not move double digits, but today it did. That is 122 basis points that it has moved in 1 year. 122 basis points higher than 1 year ago. This means that finance buyers have significantly less purchasing power than 1 year ago. This means that same payment 1 year ago is now about $250 more per month on the median price of a home nationally. That means, guys, what this means, let me put it into some numbers in perspective for you. That means if you qualified for $400,000 last year, 1 year ago, you now qualify for $350,000. And I'm going to use some statistics on our market. So 1 year ago in our market, Southern Nevada, Las Vegas, Henderson, North Las Vegas, okay? 1 year ago, the median price was $380,000. So if you qualified for $400,000, you were in decent shape. Now, as of 2 days ago, our median price is $435,000 year over year. $435,000 is our median price. So now if you qualify for $350,000 with the median price of $435,000, that's a difference of $85,000, and you are now effectively priced out of the market. Bad news for first-time homebuyers, okay? I told you guys that the 10-year bond yield rate is going to climb like crazy. I predicted it's going to be 2% very soon. Guess what? We are already at 2.017%, up 9 bips on the day, and it's fluctuating. I actually think I saw it at 2.09. Going to keep going up. Okay, 9 bips in 1 day. In some real estate news, Zillow is, you watch my videos on Zillow and what happened, they got out of iBuying. Zillow is set for their first report since eliminating the iBuying program. Once we get that report, we're going to dissect it, go through it, figure out what's in it, and then we're going to discuss it and what their plans are. Because the real estate market is absolutely red hot, but real estate tech stocks are not doing so hot. Why is that? Okay, I also wanted to share something that I found very, very interesting. And this is a small sample size, but I can only predict this is where it's going. I've had 6 listings this year already, and between the $400,000 and $500,000 price range, and all have received multiple offers. And between the 6, we've received about a total of 100 offers. And I wanted to let you guys know this because I find this to be very interesting. I don't know if this is an anomaly. I don't know, but this piece of data I think could be alarming depending on how you look at it. But in my market, of those 100 offers I've received, about 75% of them, about 75% of those offers that I received on these 6 listings have been foreign nationals. Foreign nationals, 75% of offers. And these foreign nationals are actually Chinese investors, foreign Chinese investors. I found that very interesting that 75% of the offers I am receiving from my clients to sell their home, these offers I'm receiving to purchase the home, 75% Chinese nationals. So I thought that was a very interesting piece of information that I wanted to share and get out there. I have never seen the amount of offers percentage-wise from a particular demographic to be so high. And most of these buyers are cash buyers paying well over fair market value. So take that for what you will. All right? Anyways, that's it for today. I'm going to wrap it up. Hope everyone's well. Let me know what you think in the comments. I think there's some good information here. I want to know what you guys think. Please leave a comment, like, and subscribe to the channel. Hit the bell notification so you get alerts when I post a video. Also, get my books right over there. Go get them. jordandove.com/books. They're free. They're yours. I'm working on another one. If there's something you want me to write about, let me know. I would definitely like your input. So anyways, that's it for Thursday, February 10th. Rates, 30-year fixed mortgage, over 30%. 10-year bond yield, over 2%. Chinese investors, 75% of all offers I'm receiving. Inflation, 7.5%. It's getting nuts. I don't know what's going to happen. What do you guys think? Let me know what you think's going to happen. I'll talk to you guys soon. Take care.